You want killer bull market entries on Alethea AI. That's what we're going to be talking about in this video. We're zooming out into the macro. The crypto market's a little bit overheated at the moment. Alethea AI, it was 10 cents. It's down less than 2.5 cents now. So I'm going to show you what I'm doing, how I'm playing this for the bull market. He's Alethea AI. Before we dive into the charts, we're going to look at some fundamentals. We've got the artificial liquid intelligence statistics. Remember, we're going macro on this, so we're going longer time frame for the next bull run. It's currently got a market cap of 85 million. What's that telling us? That it's a low cap. So this is a tool that you can use to spread your portfolio accordingly. It's pointless having loads of low caps, because they will wreck you guys. You need to have an even spread between high risk, low risk, medium risk. This is how you can do this. So we've got an 85 million market cap, fully diluted valuation of 244 million, and then we've got a circulative supply of 3.5 billion. The total supply is just under 10 billion. So we know that we're not even halfway as far as the circulative supply is concerned. And what you can do is you can just click on the circulative supply here, and you can find out exactly how these tokens are divvied up amongst the team, amongst the developers. And you can see the total of 9.8 billion. Out of that, the Treasury gets 395,833,000. You've got private and strategic sales there at 1.3 billion. You've got the ecosystem development at 2.7 billion. So you can go through and you can see exactly how it's made up. So we're going to start off on the daily chart, and we're going to start off with a blank chart because we're going to analyze this together. There's a hidden meaning behind this chart, and then we're going to decipher that together. So by the end of this video, we're going to have a greater understanding what is fair value for Ali for the next bull run. You can see start here. First and foremost, it's a new cap, guys. It's something that didn't come out in the last bull run. It wasn't here in 2021. It wasn't here in 2022. It launched here on BitGet on the 7th of February 2023. So the first thing you can see here is it put in a high. All these new tokens, when the launch, puts in a high. So it's put in a high, it's come down, and this is what you can call a cup and handle. You can call it a bump and run. You can call it whatever you want. The hidden meaning behind it is the same thing. So you're pulling down, there's your handle, and then we want a break of this, and then a move to the upside. We're going to talk about dollar cost averaging, guys, because when you're talking about macro, when you're talking about long-term, dollar cost averaging is a very powerful tool. And more importantly, dollar cost and average, when you're at levels like this, can be even more powerful. So we'll get the cup and handle off. And what we're going to do is we're going to dive in to the macro. We're going to dive into the weekly and see what kind of clues, see what kind of indicators that the market is giving us. So first and foremost, what we're going to do is I'm going to add in a new tool. I don't usually use this, but it's something that is powerful. It's called the fixed range volume profile. And what this does is it gives you the mean, the most trade-in price between the whole of the chart. So we start off on the high here, move our way all down to the bottom. What this is going to do is give us fair value. Where's the most traded area on the Ali chart? So we can build this level in here. This level is sitting at 0.21612. And you can see price actions nearing this area here. We've got another area of confluence where price was reacted and price rejected time and time again, which is going to act as our support zone. So we can pull our support zone down to the mean, the bottom end of 21612, and at the top end 27815 for our area of interest. Dollar costing into these areas here, if you split it into four, dollar cost here, your dollar cost here, your dollar cost here, and your dollar cost here. And then when you're dollar costing out, people talk about dollar costing into the market. Nobody talks about dollar costing out of the market, because after you've had the bump and run, you want to be dollar costing out, dollar costing out, dollar costing out. You don't need to take all your eggs off one basket, but dollar costing out of the market when the market's running is a powerful tool. So how far has Ali run? Has it hit any of our levels? What we can do next is stick on our Fibonacci level to see if we got a reaction at the big 618. So a retracement from the high to its bear market low. And you can see, look, these tools are powerful. It's come up, it's kissed its 618. 618 sitting at 63240, 0.063240. And then we've had a pullback. How far was this pullback? How far was this pullback? 786, big 786. So you can see exactly, there's the 786, right in the middle of our zone of interest. You can see we've had this deep retracement, and we know exactly from this when we're right and when we're wrong, so we can assess accordingly. And this is what I mean by dollar cost averaging. If we're wrong here and price pulls further back, you can get a second entry there. If it pulls further back, you can get a third entry there. And if you get a chance where it comes back and tests its bear market low, There's another entry. What happens if you don't hit all 4 entries? You only hit 3 entries. Tough, move on, find something else, guys. That's what it's all about. Make sure you get those 3 killer entries or 2 killer entries. Don't worry about the other 2. You can move on. You can find better opportunities with those, but be greedy with your entries, guys. So these are the good levels that I'm looking for Ali for the next bull run. This is weekly. This is macro. Even if we get a pullback in the crypto market, make sure you stick your limit orders there, take advantage of it, and get better averages.